I've been asking CEOs for the last day and a half, what do you do with 25% tariffs? And now it's going to be, what do you do with 50% tariffs? What's going to happen to the market?
Well, it's pricing it in. Copper is, is heading towards $5 a pound right now. But I think aluminum is the one to really watch, because the question is, can you onshore aluminum production? And the answer is absolutely not. If you think data centers and AI are power intensive, aluminum smelting is in a whole different world. It's 6 times more power intensive per dollar revenue than AI data centers. So if you're already power constrained, there's no possible way you're going to bring all of this aluminum smelting into the United States. So
where do we get most of our aluminum and steel then, the refined products?
Well, a lot of it comes from the hydroelectric power up in Quebec. So it comes down into the U.S. from that. So shutting down that cheap source of aluminum supply and trying to replace it with really expensive domestically produced supply, I think is going to be a tall order to ask.
It's been a tough commodity road in the last couple of weeks that we deal with this volatility, right? Oil was at a 6-month low. That's on recession fears, tariff fears, growth fears, etc. What kind of cycle are we in right now?
Well, I think what we're going through is a huge shift in the global order around security. And I think, what is the response that probably Ontario is going to do to these tariffs? They're probably going to cut power. The governor's already threatened he's going to do it. He cuts power into the U.S. Energy security is top of mind. And I think that's what's going on right now, whether it's in Germany. Actually, Germany, the Norwegians threatened to cut power into Germany back in December when a crisis occurred there. So I think energy security is top of mind for everybody around the world right now.
Okay, so what does that look like? Because what's so interesting about commodities is it'll always clear at a price, right? You'll always buy something, it just depends on what price you'll buy it. Is that still true?
Absolutely. And I think what we're going to start to see is, that's what's going on with aluminum and copper today, is they're going to price in a security premium to make sure you have that supply in your country, domestically protected and duty paid. You're seeing it in gold and you're seeing it across the metal space. And in particularly in energy, we're beginning to see that. And I think that is going to be the primary driver of the, let's call it the new cycle in commodities.
So it's not geopolitical risk. It's not a green premium. It's a security premium.
Correct.
You're going to pay up to produce this stuff at home.
Yep, exactly.
That's a humongous shift.
Oh, it's huge.
Huge.
And it's going to be really difficult to do, whether or not, and I think the argument we take is it's going to be a diversified set of energies. That's why we call it the new dual order, is because you're going to want oil and gas, you're going to want renewables, nuclear, you're going to want everything, and you want to diversify yourself, because if you lose one of those supplies, you want to be diversified so that you can deal with that disruption. And I think the key point here is when we think about fossil fuels, why do we like fossil fuels so much? Is because they're tradable. They're portable, they're storeable, and they have high energy density, which is why we move them around the world. Those same reasons we like them, it's the same reasons they're so dangerous, because somebody can just take them from you. And so when we think about what's driving, I think, this new environment we're living in, let's call it peak trade instead of, peak. Actually, look at the evolution of peak oil. It started out peak supply, we're going to run out of supply, and then peak demand, we got too much of the stuff, so we need to reduce the emissions, and now it's peak trade, meaning I can't get my hands on it.
So what's going to be really interesting then is if we get a peace in the Ukraine war, what happens with Germany and Europe in buying Russian gas?
They're going to be hesitant. They'll probably take a little bit. Yeah, they're still buying it, but they're going to diversify their sources. And I think that's the key message here, is diversify your sources so you're not so dependent on one supplier, one type of energy. And I like to point out, what is the best-selling car out there? A PHEV, a plug-in hybrid. Why? Because it operates off oil, gas, solar, wind, nuclear, the entire gambit of all the energy sources. And I think that type of diversity is going to be key in this new dual order.
Okay, so if I'm looking at prices in general, does the band move up? Do prices become more volatile? Do they move down? If I'm looking at, say, oil or copper, what's my trading band?
I think that the volatility is going to explode across all these markets. You're already seeing it in power and the metals and across the space. That's going to lead to a higher average price. By the way, the volatility then discourages the investment. Because I don't want to invest in this thing, it's too volatile. Lower investment creates more volatility, and it just feeds off of itself.
You're one of the first to invent the word supercycle. Right? That we have big super cycles, there's big ups, there's big downs, and there's an investment cycle that goes with it. Are we no longer in that?
I think that's a great question. And those super cycles before were created by demand pull, creating big shortages, created these big trends that created that super cycle. This one's a malinvestment cycle. It's industrial policy push, which creates pockets of imbalances. I like to call it, it's like a bubbling cauldron of little mini super cycles everywhere, and you get these high volatility, and that's what we're seeing. By the way, the opportunity for investors in this environment is phenomenal. In fact, one of the themes going around here in CERAWeek is the oil market and these markets are micro bullish but macro bearish. So that micro creates these little opportunities inside there that you can take advantage of, but you don't get that big upward trend. And I think this bubbling cauldron of little supply and demand imbalance is probably the best way to describe it.
Does it change the time horizon for investments or the return for those investments?
When we think about long-term investments, it's going to provide a very similar return, but you got to manage that risk. And I think that's the real, the message here. When we think about, the focus before was on levelized cost of energy, get the LCOE down. We got it down, but we were unable to deliver the joule. So you think about Germany, it got its levelized cost down, but it could only produce the power when the wind blew or the sun shined. Now the focus is on that delivered joule. You can think about now the focus is on ROE instead of LCOE. And so another way to say it is dispatched power that goes to the consumer as opposed to a centralized production of power.
Okay, fascinating. One more quick question, because you're and it's an oil conference.
Yeah.
What's the lowest price of oil you think we're going to see this year, and what's the highest? Totally unfair question.
I think that's a great question because about this drill, baby, drill.
Yeah.
We're sitting on the bottom of the cost structure.
Yep.
Now. You already see it, drilling's coming off. All the OPEC countries are under pressure. Yeah, maybe you can get down into the low 60s or something like that. I would argue, the market's to the upside. Looking at the amount of investment out there, inventories are low. By the way, and now you put the security premium, people are going to be scrambling to get the barrels, bring it in, and I think that's going to be the key message.